Today I am going to talk about latest quarterly financial performance of GNA Axles and the outlook going forward. Let us first discuss the key highlights from the result. On the back of strong growth coming in the commercial vehicle in both the domestic and the export market, the company has posted a significant growth of around 48% in its net revenue. Domestic market witnessed a growth of around 19%, whereas export market witnessed a growth of around 89%, primarily because of the strong growth in Class 8 trucks in North America and Europe. And talking about operating profitability, despite a significant rise in raw material prices, company witnessed a 33 basis points expansion in EBITDA margin. This is primarily because of the operating leverage that the company has on the back of strong volume growth. Now, moving on to the stock outlook, there are a couple of factors that work in favor of the company. First is its foray in SUV and LCV segment. In order to drive growth for future and find new avenues, company has started focusing on SUV and LCV segment. The management has indicated they plan to set up a manufacturing facility with the initial capacity of around 600,000 units, which will be increased depending on the market conditions. The company targets North America, Europe and India as their customer or as their geographies for this particular segment. Secondly, the management has been focusing on increasing its capacity both in the domestic and export market to cater to the growing demand. Management highlighted that the company is planning to expand its export capacity by around 25%. Thirdly, the company has a domestic dominant position in the Indian market due to superior product quality and its strong clientele. The company has a market share of around 60 to 65% in the Indian market. Moving on to industry opportunities, company is currently working under favorable industry dynamics. If we talk about export market, the US is witnessing a strong growth in the Class 8 heavy trucks. This is primarily due to the renewal and expansion of the fleet. The same is the case with the Europe market. So there is a very favorable industry opportunities available in the export market. Coming back to the home market, that is the domestic market, we are currently facing various macroeconomic headwinds such as rise oil prices, increase in interest rate, liquidity crunch that have dampened the demand for commercial vehicle in last 1 or 2 months. However, what we believe that the long-term outlook in India continues to be very strong. Apart from that, the changing emission norm to BS6, which is to be implemented by FY2020, would expect it to lead to pre-buying of the vehicles. Apart from that, the government's scrappage policy, which is expected to lead to the replacement of around 200,000 to 300,000 vehicles, would augur well for the company. Finally, attractive valuations. On the back of the strong stock price correction amid market volatility, the stock is currently trading at around 13 times FY20 projected earnings, which we believe very reasonable for the company like GNA Axles. Overall, the company is well placed to take advantage of the growth coming in CV segment both in India and abroad. That's it from my side. For more views and updates, please log on to moneycontrol.com.